Now I'm going to present the part 3 of salary, house rent allowance based problems. Now let me see practice 7. Calculate taxable salary of Mr. Ram, and government employee residing at Madurai. While studying the problem, we have to carefully watch the place of an assessee at Madurai. So it is a non-metro city, right? The salary 10,000 per month, DA 2,000 per month, only DA only given. There is no information about a DNS payment. If it is DNS payment, it will be considered as a basic pay. It is only a DA, so it becomes under allowances part. If it is a DP means it may goes to basic part. So we have to segregate the DA if there is any information. Enters means we have to segregate into DP and DA. Next, house rent allowance received 1,800 per month. Rent paid for the rental house is 2,500. Rent paid, so we paid rent, so we can claim exemption under section 1013A. Entertainment allowance 4,000 per month. Fixed medical allowance 3,000 per month. The project allowance 2,500 per month. Employer contribution to RPF, recognized provident fund. See, actually, PILS means profit in lieu of salary. Here, actually, we have to consider only the provident fund. Actually, provident fund were classified into 4 categories: statutory provident fund, recognized provident fund, unrecognized provident fund, and public provident fund. In case of employees, actually statutory, recognized, unrecognized, these 3 provident funds only considered while computing taxable salary. In case of the statutory provident fund and unrecognized provident fund, actually in case of statutory provident fund, the actual employer contribution and the interest credited thereon was fully exempted, was not taxable. In case of unrecognized provident fund, employer contribution and the interest credited thereon 100% taxable in the hands of employee. In case of recognized provident fund, on employer contribution up to 12% of salary was exempted, and the interest credited on RPF up to 9.5% on such interest was exempted. Please note this point very carefully. In this problem, employer contribution to RPF at 13% of salary, interest credit to RPF at 14%, and the professional tax paid by him. In this problem, we introduced the standard deduction under section 16.3 item professional tax. Okay, let's see how compute the taxable salary of Mr. Ram. Basic pay 10,000 to 12, 1,20,000. DNS allowance 24,000. House rent allowance received 21,600. Less exemption under section 1013A. Rent paid minus 10% of salary. He paid rent 2,500 per month into 12, so 30,000 minus the 10% salary. Salary means basic plus DP plus commission, but in this problem we have only basic. 1,20,000 to 10%, 12,000. So balance 18,000 is the first exemption item. Second, actual house rent allowance 21,600. And the third one, what city? Madurai. So 40% of basic pay. 1,20,000 to 40%, 48,000. Out of these 3, whichever is least exempted, balance only taxable. Next, entertainment allowance fully taxable. Fixed medical allowance fully taxable. Project allowance fully taxable. Employer contribution to recognized provident fund, simply says RPF, 13%. Actually, for the RPF also, salary means basic plus DP plus fixed percentage of commission on sales. Here only basic pay 1,20,000 into 13%, 15,600. Less exemption up to 12% of salary was exempted on salary. So 1,20,000 to 12%. Balance only taxable in the hands of employee. Interest credited to RPF at 14%. The interest calculated percentage was given already in the problem itself. So for 14%, 2,800, up to 9.5% exempted. So we have to do the cross multiplications. 2,800 by 14 into 9.5, that will be 1,800 was exempted, balance only taxable. So add all these, we'll get the gross salary. Let's do standard deduction under section 16.1. 50,000 for all employee. Mr. Ram is a government employee, so we can avail. He also received entertainment allowance, so we can deduct entertainment allowance exemption under section 16(2), maximum of rupees 5,000. And he also paid professional tax, so we can claim less professional tax exemption under section 16(3). In this problem practice, we availed standard deduction under section 16(1) and 16(2) for entertainment allowance for government employees, and the professional tax under section 16(3). All the three deductions were covered in this problem. Please listen carefully. So the balance taxable salary will be 2,06,200. In the same pattern, better the listeners can practice exercise 7. Now I wish to go for practice 8. Compute taxable salary of Mr. Amir residing at Trivallur, non-metro city. Salary 16,000 per month. DA 4,000 of 60% of which forming part of basic. That means in the 4,000, 60% be treated as a dearness payment. Balance 40% be treated as a dearness allowance. Listen here. Basic pay 16,000 into 12, 192. Dearness pay 28,800. Dearness allowance 19,200. HRA received 3,000. So that's 6,000. Less exemption under section 1013A. How much you paid rent? Rent paid for rented house 4,000 per month. So 48,000 rent paid minus 10% salary. Salary means basic plus DP. You have to add both into 10%. Balance 25,920. Second one actual house rent allowance, and the third one 40% of salary because is residing at Trivallur. Out of these three, whichever is least exempted, balance only taxable. Next in this problem, children hostel allowance 600 per month is one daughter studying in 5th standard and stayed in hostel, so only one daughter. So we can claim exemption only for one daughter only. Exemption under section 1014, 300 per month for hostel allowance. In case of education allowance, 100 per month. Hostel allowance is 300 per month. Into 12 into one child, so 3,600. Balance was taxable. And daily allowance received 6,000. Daily allowance, it was fully exempted under section 1014. Next one is family allowance, it was fully taxable. Next one, fixed medical allowance 750 per month into 12, 9,000 fully taxable. Last one, professional tax paid by him. This amount may qualify for 16(3) deduction. So add all these things, we'll get the gross salary, less standard deduction 16(1). And in this problem, no information about 16(2) because Amir, whether he is a government employee, no information. So we have to treat him as a non-government employee. No deduction under section 16(2) was permitted. Next, there is professional tax under section 16(3). He paid 2,000 as a professional tax, so we can claim it as deduction. Balance only taxable salary. Okay, bye.